Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking markets, Fed coming up next week, also a bit of an earnings recap, and touch on the election, U.S. election next week, which, boy, I know everybody has their eyes on. Joel is the co-host of the Benzinga PreMarket Prep Show and editor of the PreMarket Prep website. Joel, let's start off with markets. Markets were really on their back foot to end the month. So on Thursday, took a big drop. I know chatting with you last week, you were more of the defensive mindset, thinking that markets could show weakness. Well, they did into the end of the month, but they're starting off at least this month, today on Friday, a bit better. They were up about 1%, but have faded off some of their highs. Joel, what do you think about this volatility this week in the markets?
Good afternoon, gentlemen. Thanks for having me. I mean, all good things must come to an end, right? At some point, we were on the heels of a 5-month winning streak in the S&P. We had been higher in 11 out of 12 months. So it gets to be a point where there's a little bit of buyer exhaustion, right? And people are more prone to sell. I think you had the combination of the end of the month, not the end of the quarter, but the end of the month, people wanting to lock things in. And then just, good old volatility, good old, nervousness about what the Fed's going to do. I put more stock in the sell off from yesterday than I do from the rally today. And as we speak, that rally is dissipating. So bad day yesterday, nice recovery today, but I'm not optimistic moving forward here, at least over the next couple of weeks.
Well, Joel, it also looks like Amazon is carrying the torch today for some of the mega cap tech stocks, and it had a pretty good earnings bounce. So what do you make of the move? I think it's up 6% today in Amazon.
Great point, Shad. It just this S&P 500. I mean, they just find something to go up, right? Apple down, Amazon up. They hit Meta and Microsoft yesterday. That had a little bit of an impact. But this S&P. I mean, you have the tech stocks that are keeping it afloat. And as long as all of those, don't fall on their face, look what Tesla did to the index. Look what Amazon's doing to the index. Look what Google's doing to the index. So that offsets, Apple, Microsoft, and so you just don't get the big whoosh now. So well, yesterday was a kind of sell everything day, but it's just the big tech at the top. We also have oil components up there at the top. They're doing okay. So man, this thing just you think it's going to fall off a cliff and it doesn't. And then the other baffling thing to me here is the small caps are still holding up. I mean, they did sell off. They're off their October highs. But I mean, you look at the TLT or the 30-year bond, holy mackerel. I mean, if you need lower rates for the small caps and everything, it doesn't. Look at TLT's down $1.50 today. So the resilience in the IWM is baffling, and just the composition of the index is making it look not as bad as maybe it's really going to be.
But Joel, hasn't that been the story? Big tech leads the index higher, and then we see a rotation into a number of other sectors, and the index fades just a little bit. And then everybody piles back into big tech, all in this environment where we have seen bonds selling off. So it does seem like money is more so staying in the markets and continuing to rotate broadly into the markets.
But you know what's changed in the tech trade in the past week or so?
No idea. What is it?
Who was the darling, the early darling
NVIDIA?
of the well, it's still a darling.
Yeah.
I mean, if you own that thing, congratulations, it's still holding up. But there was another stock, and it was called Super Microcomputer. Okay, this thing skyrockets from under $10 to over at 120, and then all of a sudden they have accounting issues. Okay, so it is not taking down the rest of the tech market. This could just be a individual case with Supermicro. I'll tell you one thing: when you have an audit and your accountant calls you up and quits, you have a problem.
Oh, I
Okay?
used to audit, Joel. That's the worst thing that can happen to you.
Well, that's what happened to Supermicro. So for all that are in agreement that the tech trade, the AI trade, got ahead of itself, well, maybe Super Micro is the poster child for it. And that's all I'll say on it. Nvidia made a new all-time high. It backed off. That's the best in breed. But, if you're a believer that the AI trade it's gotten a little bit ahead of itself, then you might want to lighten up on the tech sector. This SMCI down another 266 today. They got to resubmit filings to NASDAQ in order to stay listed. So there's a little chink in the armor there in the AI trade. Like I said, is it a one-off specific to Supermicro? Maybe. If not, look out.
Yeah, Joel, a lot of people thought that the move in Super Microcomputer was a little exaggerated in the first place, and there was people talking about fraud 6 months ago, so it doesn't really surprise me that it's pulled back. But what about a stock like AMD, where it's kind of middle of the road, Advanced Micro Devices? It's an AI stock. It had a nice pop earlier in the year, and it's kind of trended sideways. Yeah, that's kind of a middle road. It's not NVIDIA, it's not Super Micro. What do you make of a stock that's well followed like AMD?
It is, and it's lost its way. I mean, at least technically, when I look at a chart of something like this, when something makes an all-time high, makes a rebound and keeps making lower highs. Now, Lisa Su has done an amazing job with the company. There you go. I mean, not everyone could be winners, and like I don't know all the different chips and all the different components of everything. But I mean, Nvidia, it's like Nvidia and everybody else. I guess that's the best way to put it.
Let's tie this into tech, though, because some of the tech earnings have been decent. And everyone keeps saying how tech is just spending so much money on AI. At least they have that money, but eventually they'll need to see some revenue, some earnings from AI. They're still really not generating anything from their AI investments, but those investments continue, but their earnings are still okay. So, again, the other big tech names that are really supporting this run in the chips.
Yeah, I think, what hit Microsoft yesterday is that, the cloud, I mean, it can only expand so much. And I think that's what you saw in Microsoft. Now, Microsoft in case too. I mean, if you look at the chart of that one, and I actually said I was speaking about this on the show yesterday, I mean, this thing has just been a dog as far as the relative performance goes. I mean, you got, and it's still, it got made an all-time high in July at nearly 470. One rebound was stopped dead at 440. It almost got there again last week, but then got knocked down off earnings. And here's the problem with Apple. Here's the problem with Microsoft. They're still trading at historically high valuations, right? So they're not ripping higher. They're not gapping up, so your momentum traders are not touching it, right? Or they're staying on the short side. And your value people are like, okay, 222, look me up when it's 190 or 195, where it comes down to a valuation where historically it's provided value. So you have a gap between your value investors and your growth and your momentum investors. And that's why you're seeing the rapid declines. The value people are not touching I mean, you could be wrong because you didn't touch Microsoft in June through July when it went from 400 to 470 because of that. But in the end, the fundamentals, the valuations, they matter, but they only matter when they matter, when the street turns on you. I'll give you another evaluation, another darling, Celsius Holdings, right? The Celsius drink. You guys know what that is? Do you?
The bubbled water. Yeah, it's like a flavored water. Seltzer water. Yeah.
Yeah. Look at that thing. That thing started the year at 50, went up to nearly $100, and then they came out back in late May and said, you know what? We're not growing like we're growing. And that thing never looked back. 90, 80, 70, 60, 50, 40. Now it's just muddling at the bottom of the chart around $30, and I still don't even know if the valuation makes sense on it.
Well, it was bubbling and now it's muddling. Well, let me ask you this, Joel. You say valuations don't matter till they matter, and a lot of people are watching earnings reports closer. Now, we've had a lot of earnings reports already in. Are there any you're still looking forward to, or any you think are significant?
Well, you got NVIDIA, right? Obviously, that they come late. But the way that the earnings cycle works is you're going to have the retailers coming next, right? And people are waiting. When's the inflation? When's the consumer going to give in? So you're going to have retail earnings coming in, and boy, there's some retail. I mean, there's your haves and your have-nots. I mean, have you guys looked at Estee Slaughter lately? What that stock has done? I mean, 90 to 67. Oh, they came out with a poor report. You talk about haves and have-nots. Look, Nike 90 before its report, hit 75 yesterday. And then you have On. Do you guys have any ON shoes?
I
On
don't.
holding it? You
I
do?
don't, but those are, man, those are expensive.
Yeah, well, you guys over there at the Correlate Economic Report, you guys can afford them. So there's one, but like Skechers, Skechers getting hit, Crocs getting hit. I mean, and then you have that deal with the pre-holdings and Tapestry called off, 42 at the end of last week, under $20 today. I mean, watch out for that earning. The retail earnings give you a little bit of a more of an inkling of what's going on with the consumer.
Joel, let's then look ahead to next week then, because look, election, Fed meeting. People are saying the Fed, it might not cut 25 basis points, but the market is pricing in 100% certainty that they're going to cut 100 basis points. And the election, boy, oh boy, we can talk till we are blue or red in the face about what's going to come out of that election and how bad it's going to be either way. But fact of the matter is, these are market moving next week. What are you expecting?
Oh boy, oh boy. I'll tell you, that quarter, yeah, 100, you should say 99.99% thinks that they're going a quarter, because I'm the 0.01% that doesn't think, nor do I think it's needed. And the reason I'm saying that is, man, do they want to, do they want to make a decision the day after the election? I think it's one of two things that are going to happen. If they do go to the quarter, they're going to say, okay, you got your quarter, but we're waiting. Or they'll do nothing and say, stay tuned. And that's why I thought, the half was a little bit of a preemptive strike, because of the next meeting coming the day after the election. So stable for longer. I mean, lower rates are, they can only do much so good. We're not going back down to the rates that maybe in Canada, the way you guys are slashing rates over there, but we're not going back to that free money scenario that, really pumped up the economy and got us into a lot of trouble when added to COVID.
Yeah, Joel, there are a lot of other countries and a lot of other central banks that are cutting faster than the U.S., but there's also one economy that's going to be stimulating next week, and that's China. They're supposed to put out their big stimulus package, as if the week didn't already have enough going on. What do you think that would do for the Chinese markets, and then, expanding it out to the global markets?
Well, I mean, that they said they were going to do more, taking it right out of our Fed's playbook. If you didn't chase those stocks on the initial run, and you have a strong inkling that they're going to do this and it's actually going to do things good, because one thing, guys, you got to keep in mind when these moves are made. I mean, the results are not immediate. And the ramifications of doing these things are not immediate either. So that was a big run in something like Alibaba, the FXI. So if you're a believer in the China trade, then here's your chance to buy the dip.
Yeah, I guess so, Joel. But look, it's been buy the dip almost across the board in the U.S. pretty consistently. We'll see what the fallout is. Joel, as I guess nervous as you might be about the markets, look, they are still broadly hanging up there, right? So is this a scenario where in one day we could have a major drop and that could start a major bear market? Or is this weakness that could just be that grinding nature where markets just don't move, don't hit all-time highs, what feels like practically every week?
Bulls make money, bears make money, pigs get slaughtered. And I think that you have to look at, where you're at in your investing horizon, what objectives that you want to make, and still, even after that sell-off, we're relatively close to all-time highs. And I think I mentioned this last week. Goldman came out and said, hey, the last decade, well, the returns that we had, don't look for it over the next 10 years. That's kind of the way I feel. I mean, there's, no matter who's in the White House, I think there's a lot of problems. There's a lot of problems with the deficit. We're just kind of sweeping the geopolitical problems under the table. So, there's a lot of uncertainty out there. So I think the high's in for the year and maybe even longer term.
Very interesting, Joel. That's going to be something that we're going to be able to follow up with you at the end of this year. We'll see what the volatility is next week. And one thing to remember is even though the Fed meeting is on Thursday, I find the market reaction the day after the Fed meeting more descriptive of the trend that might be in place. But hey, we have so many other factors next week. It is going to be fun in a way, but I'm sure also a little bit of a headache with all the commentary that goes back and forth with especially election news. Joel, as always, thank you for your time. Everyone, click that link in the show notes to visit the PreMarket Prep website. Joel, have a great weekend, man.
All right. Thank you, gentlemen.